price can stay below this area, right, you want to be looking for shorts, right? We are bearish. Again, to make this very simple, the dealing range is simply the most recent swing low and the most recent swing high. That is simply what the dealing range is. And so from here now, how can we understand where price is likely to go? So the way we do this is by understanding that we are in a premium, we're way above the 50% area. And what we want to do in the high time frame is start to look for fair value gaps, start to look for POIs, right? Very important to understand that. So now from here, we're in a position where price on Friday was pretty bullish. We ended the week bullish on the S&P 500 or ES. Now we have a gap over here. So we have a gap over here. This is a gap, right? We can treat a gap as a fair value gap. The market could react off this gap. We have reacted off this fair value gap. And we also have some fair value gaps down here as well. So this is price also leaving a fair value gap. And so from here, right, there's a couple of things that we can expect from here at least, right? So if price stays below this fair value gap over here. So this is the fair value gap you want to be looking for. This is the supply area. If price can stay below this area, right, you want to be looking for shorts, right? We are bearish. We can stay below here, we are bearish. And we can be bearish potentially all the way down to this region, right? We can be bearish all the way down to here. So on the S&P 500, around 55.74. So what's going on here is we want to use premium and discount and fair value gaps together to form a higher time frame bias. And so we have respected this fair value gap. However, if we can stay below this fair value gap, then we can definitely fill this fair value gap, potentially down to this fair value gap. So this is my next kind of target on the S&P 500. So provided we stay below kind of this area, so 59, what's that going to be? 59,800, 59.80, 59.70s. If we can stay below this kind of area, we can expect lower prices because we also have some liquidity over here. So the market's target fair value gaps, the market's target liquidity. If you can understand these two things as a trader, you can increase your strike rate by simply knowing what the higher time frames want to